This is Sovereign Debt, a podcast on greening the global economy and debt sustainability. I'm your host, Jill Doshi. Hello, everyone. Thank you for tuning in again. I'm super happy today to have Fiona Stewart with us. Fiona is from the World Bank, and she is the lead financial sector specialist in the Finance, Competitive and Innovation division. She's been playing a very central role in the World Bank's response to the COVID pandemic and their efforts to support a green recovery. And we're super happy to have you here today. Thank you so much, Fiona.
Always a pleasure, Jill.
As I just said on the intro, that you've been really central to find a response to this, what we're calling the triple threat of debt, climate, and nature. And particularly in response to the COVID pandemic in terms of this support of a green recovery and a more sustainable recovery. Can you tell us some of the things that the bank has been working on in this regard?
Absolutely. No, it's a hugely challenging but very interesting time, including across the financial sector, but here at the World Bank as well. And really, we're at a point where we're really trying to very much mainstream response, particularly to the climate crisis. And the World Bank, we've always done for years a lot of work on a project level, but we're really trying to shift to a sort of what we're calling a whole of economy approach to these interlocking challenges, both at the sort of macro level, the financial sector that I work on, and then linking into colleagues working on sort of real economy sectors, our energy, infrastructure, right across the bank. And why I'm particularly passionate about the financial sector. And I think coming out of my hometown of Glasgow, lots of news on the financial sector and announcements from there, but because the financial sector can really be a very important driver for change in the real economy. And if we are going to tackle these interlocking challenges on a holistic basis, the whole of the global financial sector has got to play and will play a really important part. And it's particularly important for us at the bank because our client countries are some of the ones that are most at risk from climate change, but equally have the least resources to cope with the adaptation, the mitigation from that. And we at the bank, we talk about the OECD numbers of 3-4 trillions being thrown around to meet the Paris and the SDG Accords. Organizations like where I work at the MDBs, the bank, our whole loans are only about, we can only do 10% or something of that. We can't do it on our own. We have a very important role to play in catalyzing and mobilizing, but we can't do, our financing can't plug that gap. So that's why we've really been working very much on this whole of greening the financial sector program. And we break that down into the two halves. You'll have heard me and others use the adage, I think I stole from the great roadmap that was done from my country, from the UK's green finance roadmap of greening finance and financing green. And on the greening finance side, that's really taking the risk side of the financial markets and really getting them to embed climate and increasingly nature risk assessments into how they work, so that we're taking capital away from projects, from companies that really won't support sustainable development, and try to direct it towards companies, countries, projects that do. And that's through things like the stress testing and the risk assessments we're doing at banking systems, all the really good work that's going on sustainability reporting at the corporate level and sovereign level as well, credit rating agencies, how we make sure this gets embedded into what their analysis is. So lots of really interesting work on the risk side, the greening finance. And then the financing green, coming up with the instruments that really go from these commitments that a lot of these financial institutions have made to giving them the instruments to actually make the change in their portfolios. And at the moment of this 100 billion or so of 100 trillion rather or so of global assets, only about 5% is in emerging markets. And only about 2% of that is in things like infrastructure projects. So, there's an awful lot to do to go from the shift of these hundreds of trillions of commitments to actually starting to move the money to where it's needed to meet Paris and the SDGs. And things like the lot of work that we done, the bank was very instrumental in starting up the green bond market. We're doing a lot of our IFC colleagues, our sister organization, private sector, doing really good work on green loans, for example. In many of the countries we work in, the banking sector is dominant. So how you green the banking sector loan portfolios. things like the SME funds, guarantee funds for SMEs. So these sort of instruments that really help the capital flow so that we really get to this from commitments to action to greening the global financial sector. It's a super interesting time.
When we're talking about green bonds or even the blue bonds or sustainable bonds, those are use of proceeds bonds. And what exactly do we mean by that? And what are some of the other kind of innovations that might be coming?
Yes, so in the sort of green bond market, the World Bank was one of the first issuers of these. As you say, it's use of proceeds. It's taking specific debt that's raised by a corporate, or in our case, a development bank, can be a sovereign, and actually ring fencing it towards specific projects or sectors, whether it's for renewable energy sectors. On the social bond side, it can be for health or education, but it's very much ring fencing so that you can see where the money's going and what's it being raised and used for. And then there's a lot of very good standards for that, how you then do the reporting that's required. So you have to come back to your investors and say, yep, this is what we said we were going to use the money for. This is how we used it. And the bank's been very involved in a lot of the standard setters for those green bond principles. And we do a lot of work then helping countries set their own national green taxonomies and green bond principles, green reporting standards, which is a lot of the sort of technical assistance work that we do in countries to help them come together. What's interesting is then the sort of developments from those original use of proceeds bonds, something I know you've looked at and we've talked about before, how you can then move to a new kind of instrument, which is called the sustainability linked bonds, where it's not use of proceeds necessarily, but you're actually linking the financial instrument to results. So you set certain what you call key performance indicators. If the issuer meets a certain performance indicator, an amount of emission reduction, an amount of increase in renewable energy of their portfolio, a land use, it can be reforestation targets, etc., then you actually change the cost of capital based on hitting those targets. So it's slightly different from the use of proceeds to actually outcomes-based, these performance measures, which are very interesting and which are growing very fast in the corporate world at the moment.
And that's in part because there has been some criticism. I mean, as you said, that there's a huge growth of the green bond market and even blue bonds that are around kind of ocean economies and the like. But one of the criticism of those use of proceeds bonds is that there's not a lot of teeth to it. In other words, like you say, as an issuer, you say you're going to use those proceeds for a certain project, but there's no real financial consequence if you fail to use the proceeds as you wanted or to have an outcome of any particular sort, right? So that's kind of what's opened up a little bit of criticism from some parties of green bonds, correct?
To some extent, yes, I think that's right. And I think there is a lot of good work going on to really make sure that the ring fencing, the reporting is more robust. I think there's a lot of push from investors to really make sure that the proceeds are being used for stretch results, if you like. Very interesting. I know and I heard one of your very interesting podcasts at the start of your series on the Benin bond, for example, where you actually went from the use of proceeds, but actually they're measuring the outcomes, which I think is super interesting. So I think there's a lot of push in the market, even from the use of proceeds bonds, to really say, what is the outcome of this? And then the logical conclusion then would be, can we actually incentivize through capital to really push to outcomes? And I think that's one of the really interesting trends, this sort of performance-based instruments, I think is a big trend for 2022 that we're going to see a lot more of going forward.
No, yeah, absolutely. I certainly hope so, because as you know, Potomac Group's been working with you on designing some of that and kind of looking at how that can be, the lessons learned from corporate sector can be applied to the sovereign issuers. But a question there is really, how do you, if we're going to link it to the actual performance of an issuer, whether it be a sovereign or a corporate, the question is really, how do we set those, what we call the key performance indicators, and how do we monitor them and verify them and make sure that the issuer is not just, gaming us. So, and I know you've done a lot of work on that and have recently published a paper. Can you tell us a little bit about the key performance indicators and what could they be, and even how do you go about choosing the appropriate one?
Yeah, so we've been looking at this certainly on the sovereign level. And as you say, although this performance indicator bonds in the corporate world, I think we hit 100 billion, I think, last year. They've been really booming. There's still we're still chasing the unicorn of where's the could we do this on a sovereign level? So one of the things that we were looking at is, I think for investors more used to assessing a corporate and what a corporate target would be and how you would measure that, what does this mean on a sovereign level? And that's sort of less intuitive, less normal world, if you like, for many investors. So what we did is look at, well, what's already out there on the sovereign level? And a lot of the work we've done on sovereign bonds and ESG, etc., we find a lot of the data actually comes from the World Bank and from institutions like us. So we went back to those databases, to those indicators, to see, well, could you repurpose them? Could you use them as a KPI for a bond? So if a sovereign has a very strong, NDC target with emission reductions or land reforestation, etc., could you use those targets a sovereign has set and then repurpose them for linking to a bond? And we found there's actually, that we actually think there's quite a lot out there that you could low-hanging fruit use already, particularly in GHG, particularly in reforestation, indicators that have been, a long enough history, are measured reasonably frequently, come from a very reliable third-party source, etc. So we actually think, and we had a sort of list in the paper of an idea of what some of those might be. And then the second question is, how do you know if it's a stretch or not? And what's a target that's just a country would do anyway, to what really is ambition, the sort of thing we really want to encourage countries coming out of the COP to really up their ambition for their NDCs. This is great, and can we encourage that through financial incentives to do that? And so we looked at, and we think there's frameworks out there you could use, whether that's trends, whether that's peer comparisons, whether these interesting concepts of planetary boundaries could be used. And we've also been trying to link to some of the macro modeling that we do to see, if you look at a macro trend, what you would expect sort of forestation, what would be over and above that trend. So trying to link to some of the macro work we do to reassure that there are actually indicators and frameworks that we think are robust, that could be used for sovereign bonds, that can make these sort of sustainability linked bonds, KPI linked bonds. There is actually robust frameworks I think we could repurpose reasonably easily to take this instrument over from the corporate to the sovereign world.
And those are indicators that are data that is usually collected by the World Bank already, or you mentioned third party, it's not the sovereign themselves that is collecting that data necessarily.
That's right, not necessarily. So it can be from the UN, it can be from the bank, it could be from WRI, it can be from various sources, but that's the ones that we looked at. There's some super interesting new indicators potentially out there using satellite data, using sort of these ideas of eDNA measurements and stuff like this, which I think there's lots and lots of this stuff coming. But right now, there's some traditional, well-worn paths of these indicators we think you could actually repurpose from sort of international organizations, et cetera, that actually measure them. And that's an important point, I think, for sovereigns, because one of the challenges with the sovereigns is attribution. How do you know you can attribute the change to the sovereign itself? And then so thinking about what are sovereigns and in a sovereign control, and then obviously a sovereign can change its laws, it can change its own position much more easily than a corporate. So you have to think about what's a third party that it can't be gamed by a government, and what is what's actually attributable. So those are some of the nuances around a sovereign versus a corporate bond.
Is collecting all of this data and tracing these indicators, does that add particular cost to this type of instrument? I mean, I'm thinking of a lot of emerging market countries that are already kind of quite stretched quite thinly in various ministries and have, even when they have the ambition and they have the desire, the point is they're lacking the resources, both financial and human resources, of just doing all of this. I mean, is this really feasible for a sovereign, or is that something where the bank and other donors might step in and help?
So we've tried to look at ones that we think are already available, so to make it as simple and as low-hanging fruit, easy as possible. So that's why the sort of set of indicators we looked at was exactly with that in mind. The starting point would always be from the government itself. What have they put forward as their targets in terms of NDCs, etc.? So you're working from what a government said, and you're working from what is already collectible. And then one of the reasons that some of the smaller DMOs and the smaller countries actually that you mentioned could be or we know are interested in these sort of instruments is, although there's a very good place for the use of proceeds, as we've said, the labeled bonds, sometimes the countries are almost running out of projects they can actually tag to specifically, the sort of the definitions of green. And what they really need is general purpose support to really then help them get to the goals that they want. But the use of purpose is the general use of proceeds, the general not ring-fenced use of proceeds. These general support bonds actually is more helpful sometimes to some of the smaller countries, which is why we think they could be a really good complement to the good growth in the labeled market, the green bond market. This could be another quiver in the arrow of the support for particularly some of the smaller countries. And yes, just like we provide support for countries doing their first green bond report, I'm sure the bank and our IADB colleagues are doing really good work in this area. Absolutely, I think we'd all be there to sort of help and support in terms of the structuring, the ring fence, the reporting, how you would set a goal. You might even be able to link it to some things like programs that we already have in countries. So where we're already, our environment colleagues, for example, maybe working on reforestation projects with the government. So you have some confidence that there's technical assistance and projects underneath that would help you meet the KPI that you've set. So I think there's quite a lot of hand-holding.
So in other words, a sovereign could be then raising this financing for general purposes, but because so much of their budget is already working on some of these issues, and I'm thinking not even just climate and nature, but even more broadly, the sustainable development goals, you could link it to anything, right? I mean, it doesn't have to be linked to climate and nature. You could link it to girls' education or building
Absolutely.
hospitals or something, right?
Yep.
Okay, so when you're talking about a developing country, you're thinking already so much of their budget is going towards these development goals. So in some ways, this financing is, the financing can be just going for their general budget support in a way, and then they're getting kind of credit for actually hitting a target or delivering an outcome.
Exactly. It's really pushing and encouraging ambition. We're really encouraging countries to really step up and really have reach ambitions for their SDGs, have reach ambitions for the Paris Accords, to meet the net zero as early as possible. Well, if we can actually have instruments that really support that ambition, financially reward and support that ambition, I think that would be a real sort of game changer and really important for this whole, as I say, moving from commitments to actual action. This could be an instrument, I think, that could really be a game changer for the financial markets. Now, it's not new to us at the World Bank. It's not new to development partners. We're used to these sort of instruments, these performance rewarding policy loans, etc. It's not new to us, but it's helping to sort of link that into the financial markets and take the money that's made the commitments, that wants the ambition. It's a mechanism, an instrument to help link up that desire from financial institutions with really encouraging ambitions at the country level.
Do you think that the investor interest is there? I mean, you're saying you're trying to act as a kind of a catalyst to bring in these financial institutions and private sector who are looking for these instruments. But do we think they're ready to go into these markets and participate in these sorts of instruments?
So this is where I think some of the challenges coming with the so-called unicorn, and why maybe this hasn't landed yet in the sovereign versus the corporate sector. So with the corporate bonds, the way they've been structured, these KPI bonds, SLB, sustainable linked bonds in the corporate sector, they've had a step up. So if the corporate doesn't meet its targets, the investors get paid more. So it's a stick. We think that, well, there may well be different structures for these, may come through different countries, it may apply for different ways, but certainly for some countries, we think it's difficult, the optics of that for a sovereign, because you'd have private investors being paid more if a sovereign doesn't meet its NDC, which is a bit strange in terms of optics. So it doesn't quite work. And so having, therefore, a performance reward to a country, a lower cost of capital, if they meet the stretch, is what we really want to get to, where everyone's then aligned. The challenge is investors want to have all the impact, but they still really want to have more or less the same return. So you're getting a little bit of this. We could talk all day about greeniums and green bonds. It's a little bit there, but it's not huge. So it's not clear at the start of this market that investors would pay a sufficient performance payment to really incentivize governments, which is where I think the role of the MDBs, of donors, etc., that know this world could step in, and they may well be linking up with a third party who would, at least at the start of these instruments, do some of the performance payment. And that's the sort of role we played in catalyzing the labeled green bond market, etc. I think there's groups like us that will have to play that sort of role, donors who are interested in playing that sort of role, to get investors used to how you would price this sort of instrument, and getting used to thinking about how you would build that reward through market payments into them. I think that's the medium-term goal, but you may well, like many new financial instruments, have to use donors or even guarantees to help on the credit side to bring investors into a new instrument like this, and particularly in new markets that could really benefit from them.
No, absolutely. And I think the trick is going to be to see if the donors or various parties are willing to support the development of this market. And with, like, as you say, whether it's guarantees or kind of a pay for performance or a variety of other kinds of structures that they can do to kind of support this.
And it's not particularly new. I mean, I think all the pieces of the jigsaw are there. So we know about performance payments, we have sort of policy loans, we have the sovereign bonds, we have the green frameworks. I think a lot of it is there. It's a case of the Rubik's Cube or the jigsaw, and making the pieces fit that everyone's aligned. And that's what I think we're getting there. And lots of good work from others. Other parties are heading on that direction at the moment.
So if you're a sovereign sitting there and let's say you've read your papers and read the blogs and understand that there is this kind of interest and development, what can a sovereign do that's likes the sound of this, as, oh, I would really like a kind of general use of proceeds bond. I would like to link it to, let's say, climate and nature outcomes. How can they move forward? Because you say this is kind of uncharted territory to some extent.
Well, certainly, obviously, ourselves and IADB and other, ADB colleagues are looking at this. So certainly, there's plenty partners out there to work with you and to help think this through. And I should say, I think it's also very important to think through the country context. And just to make clear to your audience and yourself and many of your listeners are really experts in debt restructuring. And I know you've had some really good conversations around debt for nature swaps, etc. This, I would say, this is slightly different, and we're thinking more of either new debt or rollover debt. The restructuring conversations, and back to your initial conversation, obviously the bank's done a lot on the DSSI, the debt sustainability. We do a lot of work on that side of things, debt transparency. This is slightly separate. This is more sort of either new issuance or rollover issuance, I would say. So first of all, you need to really think hard about the context of your country and what of the sort of suite of instruments fits your context. So that's one thing I think partners like ourselves can help think of. if we think this might fit your country context, we'd be, there's partners there to help you think it through. One thing I would say is find a champion in the government. And particularly if you're interested in nature or climate, you need to find a champion to work with the Minister of Finance, the DMO, in the Ministry of Environment, in one of the other line ministries. Find your champion and see if you can link to good programs that are already underway in the country. So that sort of partnership will be very important. So internal champions and partners, but then there's a lot of external goodwill and champions, I think, to help countries really think through carefully what instrument fits the context that they're in.
And presumably that's the same for choosing, kind of eventually choosing a KPI or kind of what the target would be, right? Because first you have to decide, like you say, kind of where am I in the whole debt sustainability and kind of how access to markets and my investor relations and credit rating and all of those things. But then it's like, okay, well, let's say I can raise new money and I think I do have that investor support or investor interest. But then presumably to attract both, if it's donor support in some way or even just the investors, I have to kind of choose the right KPI. I have to link this to something that the world or at least my investors are wanting me to achieve.
Exactly. And I think, one of the countries that's said they're interested in doing one of these, just an example, I know that the Prime Minister's advisor in Pakistan has been talking about these sort of instruments because they have a good program on reforestation of the billion tree kind of idea in Pakistan, which is an interesting program that's already underway and they want to roll out further. So that's a good example of a country that's been thinking across the sort of different ministries of how something like this might be linked to something like their forestation program. That's an example, I think, of the sort of program that might well be well incentivized by something like this sort of instrument.
And then the idea is hopefully that they're also then, through such an instrument like this, going to be tapping into a wider investor base or kind of new sources of capital, that you're going to attract kind of a different type of investor into these countries.
Exactly. And that's certainly something we've seen through the green bonds, the labeled use of proceeds bonds. It's been super interesting. I mean, I was talking to one of the issuers of the first issuers in South Africa who did a green bond, and they in Rand, and this on the corporate side, and they said, they had investors who've never bought a Rand bond before, would never have looked at one of their vanilla bonds and bought their green bond. And we've certainly seen that. I think countries like, I'm sure Chile and elsewhere that have done the green bonds, they've certainly found on their investor list and at the auctions a whole new pile of investors that they hadn't worked with before. So you can, again, back to the greenium, we can debate, but certainly there is evidence growing that it can attract a new type of investor. And that's why I think it's super interesting, back to this idea of holistically greening the global financial system. Green bonds alone won't do it. But these sort of instruments are, I think, an interesting way of getting the needle to move from that 5% in emerging markets. These are the sort of tools and instruments that we need to get that up the dial and get the money to flow to the capital to flow to the countries that really need it.
Well, we're super excited to watch these developments in the market and to see this really start to be implemented by some countries and to just say kind of track that investor interest and see if we actually do get a greenium of sorts or what sort of response we get from the market. But what advice would you give? I know we kind of maybe already asked this, but I want to ask it kind of directly. What advice would you give to a debt manager as they're kind of, let's say, putting this together? What do you see as the potential pitfalls or difficulties in issuing or even managing one of these bonds going forward?
Well, I think again the green use of proceeds, it is a different philosophy, if you like, and the DMOs do their job very well, but this does involve, just like we were saying, we're trying to think of a whole of World Bank approach. This does need a whole of government approach. You do need to start thinking across and working with the other line ministries. And that's new for DMOs. They're starting to have to do it, I think, even for vanilla issuances, because another thing we've been doing a lot of work on is sort of sovereign reporting of ESG. And the DMOs are being asked, even for the vanilla issuances, they're getting asked these sort of ESG questions, which are not necessarily always in the wheelhouse of the DMOs. So they're having to reach across the government and to come up with, reporting and communications on these issues. So it does involve a bit of a philosophy change, but I think we all have to accept that, because this climate nature issues are a whole of economy, a whole of government, a whole of World Bank approach is going to have to be needed. So certainly I think that the cooperation, and it's a stretch for a small DMO, absolutely, it's a stretch for small teams, but given that you can attract new investors, given that we hope at least a little at the moment, we hope more over time, you will be rewarded for making these sort of commitments and delivering on these goals. It's worth it, and there are partners there to help you.
And one last kind of curveball question for you is, we're hearing a lot about countries that are on the verge of debt distress, and we know that the Fed is, going to be raising rates that likely trickle through the financial markets and cause additional stress to a lot of countries. In that case, when you're in a debt distress, you said that this instrument probably, kind of sustainability linked bonds isn't really the answer, because this is probably for a healthier country. But in those cases, when they are kind of looking at kind of a more limited options, what, from your perspective, what kind of country kind of look to for, if they're looking for climate and nature outcomes? I mean, is then it really should be looking at the debt for nature swaps, or is it just you have to put that on hold for when you're back on your feet in debt sustainability?
Yeah, so I think, say, getting out of my wheelhouse, you've got a lot of more experts, I'm sure, listening to your podcast, and a lot more experts on debt restructuring at the bank. This instrument could be part of an answer, but we're not saying I don't want people to think this is the whole answer to the debt crisis, is not these sustainability linked bonds. This is not the whole solution. It may be part of a package of a solution, and it may work for some countries. Debt for nature swaps, likewise. I mean, it was great to see. I enjoyed your conversation on the Belize bond, one at scale. And again, they're coming back. There's interest there. Again, they're not the silver bullet for all countries in all circumstances, but they're certainly one part of the armory that can be used, and a whole other sort of raft of debt restructuring initiatives going on out there. One thing I would close with to say is, particularly on the nature side, and we've found our work on ESG and sovereigns, is it's particularly the nature, the natural capital of emerging markets, the asset side of the balance sheet of a country is particularly not well understood and not well factored in by markets. And I think the more the work we can do on that, on natural capital accounting, really thinking about this asset side that emerging markets have, that is going to be an incredibly important part of the systemic risk of climate. Part of the solution is going to be these natural assets in emerging markets. How do we use them? How do we get them recognized for what they are, whether that be through nature-based solutions and payment for ecosystem services, whether it be obviously carbon credits and increasing these biodiversity credits people are working on, even super interesting ideas around natural capital corporations and actually taking natural assets and thinking of them in different ways that we almost like equity. Super interesting ideas out there. And I think that's another really important, maybe underappreciated asset part of the story that can really be important for countries going forward to get the capital we need it, as I keep saying, to the countries that need it to meet the Paris and to meet the SDGs.
No, absolutely. Because those natural capital, the trick is it can't be just a kind of number on a balance sheet. You actually need an income flow from it. So we need to somehow kind of create those markets where there is some flow to the countries in order to protect those assets and to conserve those efforts.
Yes, and a recognition of their intrinsic value. Absolutely.
Exactly. Yeah, because it's one thing just to recognize the value and say, okay, well, yes, you have that forest, or you have the ocean or the reef or something, but to actually create a flow that is, kind of helping the financial picture of the country is the key. And we're not there yet.
Lots of interesting pilots, lots of interesting developments. I think watch this space. I think it's going to be a big trend for this year and going forward, definitely, particularly with obviously the CBD and the biodiversity COP this year. I think there'll be a lot of focus and lots of very interesting further conversations on that, I'm sure.
Absolutely. Well, thank you so much, Fiona. This has been really interesting, and you've left us with a lot to think about. And we look forward to continuing to work together to make it all happen. Thank you so much.
Absolutely. Look forward to it. Thanks, Jill.
Thanks for listening. If you enjoyed the episode, leave us a review and subscribe to the show wherever you get your podcasts.